Hello and welcome to the Capital Net TV. I'm Nandita Narayan and today we have with us Mr. Vivek Soni. Mr. Soni is the partner and leader of the private equity advisory at EY India. Hi Vivek, thanks for taking time out and agreeing to do this interview with us. Could you tell us about some key trends in this ecosystem in the year 2019 as compared to the past couple of years?
Sure. We've been taking out a wide variety of thought leadership reports on covering the private equity and venture capital ecosystem in India. When I say we, I mean Ernst Young, which is the largest professional services firm and the largest advisory firm as far as private equity ecosystem in India is concerned. And, we've been sort of the view that we have entered what we call the golden age of private equity in India. To put things in perspective, 2019 H1, as per our latest IVCA-EY report, which we release on a biannual basis along with the IVCA, which is the umbrella body for private equity and venture capital association in India, this year, the first half, saw $23 billion of PEVC investment across all investment strategies. When I say investment strategies, I mean plain vanilla private equity, which includes venture capital, infrastructure, as well as real estate. It saw $23 billion of investments. Last year, for the whole year, we had $35 billion. Okay. H1 2019 is almost 40% higher than H1 2018. And the year before that, we were $26 billion. So H1 2019 is almost 90% of what the entire 2017 was. 2017 was the high at its point in time, and 2018 was a record year. And we believe this year we're going to exceed the 2018 high by at least 25 to 30%. Okay. And this is significant. So, as far as our perspective is concerned, we believe that the Indian private equities ecosystem has acquired center stage as far as emerging markets is concerned. There are large global LPs who consider India to be very, very attractive as a destination for deploying money, for giving money to GPs to invest in creating and helping create world-class, industry-beating companies.
Okay. So, how important is buyout as a strategy for the Indian private equity market?
Look, it's becoming increasingly important, and that's the reason why in today's event with the IVCA Delhi Circles, we had a panel discussion on buyouts, navigating the challenges and opportunities. The reality is that in India, the emerging trend really is that deals are getting larger. For instance, the total amount of deals that exceeded $100 million in size in 2018 accounted for 72% of the value of dollars that came in through PEVC into India. Not by number of deals, but by value of deals. Okay. 2019 has also followed a similar trend. But what is embedded in this whole trend of large deals is that buyout as a strategy where the financial investor owns more than 51%, has a controlling stake in the company that they're investing in, is a very important part. In 2018, we had over $9 billion of buyout investments. Now, to put things in perspective, 2015, 16, and 17 put together 3 years were about 9 billion. And in 2018, in 1 year, you had more than that. Yeah. 2019 H1, buyouts are already exceeding 7 billion. And the way the trend is going, this year, we should exceed, as per my estimates, almost $15 billion in buyouts across private equity, infrastructure, and real estate.
Where do you see the buyout market in India as compared to the global private equity market?
See, globally, most of the investment dollars are being raised by mega funds. And when I say mega funds, these are funds in excess of $10 billion. Globally, private equity fundraising has been on a tear. More than almost $2 trillion have been raised by private equity funds across the world. And the larger mega funds are what's driving this upsurge. India is slightly different, where while buyouts have been leading an upsurge, we believe that growth capital investments will continue to account for the lion's share as far as investment strategy is concerned. Buyouts will become more and more important, but I think we still have some time to go before buyouts begin to eclipse growth capital investment. And the reason we say growth capital includes venture capital investment, which is a very vibrant ecosystem. Indian startup ecosystem is just behind. There's the US, there's China, and there's India, right? And it's becoming larger and larger.
Yeah.
India is full of entrepreneurs. And now, because of the VC boom, professionals who want to take the entrepreneurial plunge, have the capital backing them for the right talent, for the right kind of business ideas. This, we believe, is like democratization of entrepreneurship, which is a trend that will go from strength to strength, right? But in terms of investment strategies, we think for the foreseeable future, growth capital will be the largest, buyouts will be second.